Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. So last week we had our Cabot Tides, which is our intermediate term trend model, turn green, and that followed on the heels of some positive baby steps to prior month, or even two really, for growth stocks. The question was coming into this week is how things would progress. We had all the earnings reports, we had the Fed, GDP, and the answer is the markets really had an encouraging week, maybe the most encouraging week this year. That's probably not saying all that much given the year so far, but really was encouraging, not just holding up, but really seeing a little bit of upside follow through. We're even seeing some, what I would call sort of short-term thrusts, meaning, or blast-offs or whatever. One thing that's popping around Twitter today, and I am recording this late Friday morning, is 55% or 60% of S&P 500 stocks hit a new 20-day high yesterday, which doesn't sound like that much, but it's relatively rare. Usually leads to good things. I personally don't trade on that, but the reason I bring it up isn't to focus on that indicator, but just saying we're starting to get a little bit of upside momentum here for the first time all year, so we'll see how it goes. Now, I will say, just to step back, because all I do is look at the evidence, the longer term trend is down for basically every major index and 75% of stocks at this point. And we're still seeing, defensive stocks are doing okay. I'll show you some of that. We're still seeing some rotation, like biotechs looked really ready to go, and now they're kind of softening. I'll show you that. And most important is I just continue to see a lot of stocks hesitate at resistance. There's not many meltdowns, like they're hitting resistance and just getting destroyed. But we are seeing a lot of things, test resistance and repel, test, repel. So far, in other words, the action really is among the worst stocks out there, which is fine. But, if the market's going to keep going, it's not just going to be, based on stocks that are bouncing between ranges near their lows. It's going to be because stocks really enter an uptrend. But be that as it may, I think it's a baby step process here. When you have a big bear phase, it doesn't just turn around in a day. It usually doesn't anyway. So I just consider this another step in the right direction. In Cabot Growth Investors Model Portfolio, I didn't do any buying this week, although 99% of the reason for that is because of the stocks either that we bought that are acting well, or ones that I'm looking at are reporting earnings in the next week or maybe two. So I don't want to jump in right ahead of earnings, but at the same time, I am encouraged. I'm looking to put some more money to work. But it's going to be a step-by-step process. If more stocks keep going, if the market stays healthy, normal pullbacks, normal rest periods, maybe some real blast-off indicators, obviously, we'll start putting more and more money to work, but we'll have to see the market prove itself here over time. Okay, enough with the preamble. Let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. Here's the NASDAQ. And you can see like I said, we're starting to get a little bit of momentum going. We had this little shakeout late last week and early this week, and now we've resumed higher. Today's a little bit more of a, at least as I record this, kind of an Apple Amazon day. I wouldn't say the broad market's doing much, but we're even kind of testing these old highs or whatever you want to call them. So I mean, we're on the verge of, call it 3-month highs or 2.5-month highs in the Nasdaq anyway. More important to me though, I'm not a big level guy when it comes to the indexes. I'm more of a trend guy because it works better. And you can see the 25 and 50, the 25 days actually kind of moving above it. But basically, we're starting to get a little bit of daylight here. Don't get me wrong, if the Nasdaq came all the way back down here next week, that wouldn't be ideal. But the point is, there's a little bit of daylight. We're starting to stretch our legs a little bit for the first time in a while, and it's pretty much the same. In fact, it's actually some of it looks even better on some of these other charts. This is the S&P 500. You're going to see since the mid-July low, it's been really strong. Again, some daylight above the moving averages. IWM, same sort of thing. We're starting to stretch. MDY, this is mid caps. Okay, they all look pretty similar. That's another thing too. I wouldn't say everything's perfectly in gear, but usually the longer an advance goes, things kind of get out of gear. There's divergences, there's this and that. Usually near lows, everything is pretty uniform, and it seems like that's the case here. I wouldn't say it's perfect, but it's pretty good. Okay, again, the mid-July kind of low point here for MDY, and then even the New York Composite, well above the 50-day line, 25-day line is trending up. So far, so good. If a bunch of these indexes reverse back below the lower of these two lines, depends on the chart at this point, that would negate the signal. But like I said, at this point, let's just go with the evidence, which is, growing more encouraging. Let me just get on my notes here. In terms of the growth funds are, so it's funny, it's mixed. I don't really follow ARRY officially, but it's hard to even really see. But it's still kind of went from looking better and better. It didn't hit a new low here in June. Now it's kind of lagging again, so that's kind of interesting. But for the most part, I would say IPO funds kind of similar. But for the most part, I would say again, things are kind of in gear. This is the QQQJ, the RPG, which is the Invesco S&P 500 growth sort of thing. So they all look kind of, I would say, in gear, which is long-term trend, still iffy, but above these moving averages and, you know, getting a little bit of a head of steam going. Let's see how it continues, okay? Underneath the surface, it's a little bit more, I'm just kind of presenting you with evidence. I'm not saying I trade on all this, but it's a little bit more mixed. So this is the XLP. I would say the XLP, and it is earnings season, so sometimes, you know, stock can move the index one way or the other for a day or two, but we are kind of seeing some defensive stocks perk up. Like this is XLP this week. Today it's down, but then you look at the REITs, which isn't classic defense, but again, you're kind of getting some of this rush back into some of the income stuff. It's not a bad thing per se. In fact, a lot of times these things have a good history of leading the market, obviously, if the Fed is going to stop tightening and so on and so forth. But be that as it may, it's not a negative, but if you do look, going back to the XLP, I can't pull up the chart on MarketSmith, but if you do look at a relative performance line of the NASDAQ, which is growth, to XLP, we call it our aggression index, it did bottom out in May down here, and it's been kind of bottoming out, but it hasn't quite kind of turned up yet. It's kind of still, we're still seeing a kind of a little bit of a close but no cigar situation among that. The other thing I would say, I mentioned earlier in the intro, is this is the XBI. It still looks fine. I mean, it kind of had this little double bottom. It had a nice thrust here while the market was struggling, and now it's just straight sideways at the 25-day line. So it's not bad. What I would say, though, is, you know, what we're really looking for, where the money comes from, is getting on some fresh leadership. If the market's continually rotating between groups, it's hard to make money. It's hard for the market to do consistently well, first of all. And it's hard to make money. I don't mean rotating every 3 months. I'm talking like every week or two. So, you know, so far it's fine. It's nothing worry, but it's just sort of one of these things where with the market getting going, you'd almost expect to see, hey, the biotechs were the early leaders. They showed strength. They're really pushing higher. Instead, really, since that, remember I mentioned the mid-July low, that's really been the high in the XBI, and the money is rotated into a bunch of stuff off the bottom. So just something to watch. This is mainly about biotechs. Let me clean up the chart anyway. But I am just sort of, just as a market, general market theme, you know, there's still some rotation out there. There's still a lot of off the bottom stuff going on, is what I'm trying to say. And I'm not saying, you know, I expect there to be 400 stocks hitting new 52-week highs at this point. That's not realistic. But you'd like to see, you know, new lows dry up a little bit further, number one. But you'd like to see some of these things that have been showing some relative strength, you know, start to really follow through on the upside. So we'll see. Earnings season's coming on. Then we got, let's go SMH here, which is just, this is sort of one of the off the bottom things. You can just see it was hitting a new low here in early June, and it's been, you know, thrusting higher since then, above the moving averages and all that. So that is a good sign to me. Obviously growth stuff, but just underneath the surface, I like to keep an eye on some of these indexes, see what happens. I do think the XBI could be a good clue. Beyond that, just individual stocks. Oops. So Li Auto, you know, this was one. Now it's, you know, it's a Chinese electric vehicle maker. Not saying this is like your liquid leader, but so it's always got a little bit of, like I said, you can't really trust these things. But it did have this huge run, and it had a little bit of a breakout attempt. Now, don't get me wrong, after doubling in a few weeks, you know, not a breakout not working after a 3-week rest is not the end of the world. But again, you're kind of hitting resistance here, and then you just drip, 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 drip. Now it's even a little bit below the 50-day line. Now there's support in here. I'm not saying it's the end of the world for the stock. Maybe it rounds out, but we're still seeing some of that. Halozyme, which was probably one of the better looking names out there, and still looks fine. You can see it kind of burst to new highs here in early July. Nice breakout, excellent volume. And then since then, is it bad? No, it's still above the 25-day line, but just kind of chop. You know, it's just, it pulls back with the market, then it kind of rallies back up towards resistance, then it slides a few points. So we're just still seeing some of that. Argenx, now again, this is another biotech name, losing money, but, you know, new product, big sales growth coming, big growth coming. You know, nice long launching pad. You know, hits resistance up here, consolidates for a few weeks. That's normal. Okay, hey, no big deal. And then yesterday, you know, tries to break out on earnings. What happens? They sell into it. Now it's pulling it back. Maybe Halozyme and Argenx is more of a biotech thing, but there's still some of that hesitation going on, and things that are looking like, you know, again, this is Braze, BRZE. This is not the be all end all. Again, it's not even liquid enough for me. But just seeing a lot of stuff like this where bottoming out, comes up, but then kind of rejected, comes up, still rejected. Now it's bouncing back. We'll see. Maybe the third time's a charm. I hope it is, but in general, you're still seeing some hesitation. You just want to see that it's not a bearish thing, but until it changes, I think it just pays to kind of go a little bit slow, or at the very least, if you're going to buy on strength, keep it small and give things loose leashes, because more than half the time they're pulling in and that sort of thing. Okay. Now into stuff that looks good. I mentioned you want to see leading groups. I mean, it certainly looks like solar is one. This is Enphase Energy. Now, part of this week was I don't know what the hell, but Congress is going to do something with green energy and all this. So that is helping the group. And sometimes that, news flow isn't whatever, but just looking at the chart, it's not sustainable. But just looking at the chart, Enphase has been setting up forever. It kind of tightened up a little bit in here. And now it's taken off this week, first on earnings. Yesterday was the Congress news, and today it's up again a few points. So just on the weekly chart, I mean, this looks like a clear, new RP high, huge volume, breakout on earnings, big bay, got the numbers, blah, blah, blah. So that looks pretty good. And then the rest of the group, there's others too. Now, some of these are thin. This is Array, ARRY. They're more of a equipment provider to some of this. So you can see it was an IPO. It got trashed. But again, you kind of coming off the lows, resting for a few weeks and thrusting higher on the news. First Solar is kind of another granddaddy on earnings and the news this week, similar to Enphase. Numbers here are always tricky. You can just see in the box here, just earnings and stuff are up and down. But just in general, nice long bottoming pattern, huge volume upside accumulation this week. So the solar sector certainly seems like one to keep an eye on. Okay. And then beyond that, and sort of loosely related, some of these ENC, like engineering construction stocks. This is Quanta. Quanta had this is really, these are the type of stocks you want because it's easy to hold on to. This is me going on a tangent, but breakout, this is actually ahead of the vaccine news, and you're going to see the stock just really doesn't give you that much of a reason to sell it. Eventually it corrects and consolidates, and it kind of has these three consolidations on top of each other over the past year or whatever it was. And now it's starting to stretch its legs. It does have earnings next week. Again, you're seeing a little bit of chop here at the old highs, but it also has earnings next week. But this was a loose play on the alternative energy. And then on earnings today, this is Chart Industries, GTLS, kind of an interesting symbol. But you can kind of see it's had this long consolidation. And then after really, bouncing nicely here in March, it's I don't want to say it's gone straight sideways, but just kind of a nice consolidation. And now it's starting to let loose on the upside. Again, it's got some resistance here. We'll see what happens, but we're starting to see some strength in that group and that theme anyway. Beyond that, just sort of the bottoming out names. I mentioned Braze. Bumble looks pretty good. Again, they got earnings in a couple of weeks. Most of these still have earnings. But the stock hit new, highest closing level since early December yesterday. That's pretty good compared to the market. You can just see on the weekly chart, it's been, the relative performance line clearly has been trending up. We'll see what happens on earnings, but that looks pretty good. GitLab, I'm not really sure how to pronounce this. GTLB, this was in top 10 this week. Again, you kind of have this, some of these stocks that really bottomed out. This one in March. Look at the huge 4 days in a row, kind of a volume cluster right off the lows, which, the stock held the retests, reacted well to earnings in June, I guess that was. Now it's backed off, consolidating. These things are all volatile. They move around a few percent a day. But again, you kind of have some of these sort of bottoming bases, I guess I would call them. Pure Storage. I wrote about this week. I've mentioned this before, but just all these skyscrapers on the bottom of the chart. They're not all, some of these, I think there was one or two that was churning, but pretty much all of them were big buying, a lot of them on earnings. And the stock has really, you can just see the last few months, straight down, straight up, straight down. But since this big volume clue here, which was in May, I think, or June, which was the biggest volume in a long time, the stock has really kind of come under control. Now, it's still below the 200-day line, so I'm not trying to make it sound like it's great. But anyway, I like the overall setup. I like the story. You'd like to see it almost maybe get ahead of steam and then pull back a little bit or something like that. There's work to do with all these, but as far as, basically holding support for many months, with all these volume clues, PSTG is interesting. This week, Chipotle, listen, it's a $1,500 stock, which I know isn't everyone's cup of tea. And again, you're kind of running into resistance here. But just looking at the weekly chart, you have, really a bottoming effort starting in the winter. Slightly lower lows here in May and June, but really holding in there pretty tight. And look how the volatility really kind of declined in here, meaning it wasn't swinging up and down 8% a week. That's usually constructive. And then obviously earnings this week. We'll see where volume finishes this week, but it's got a chance to be, really could be the biggest going back for a couple of years. But we'll see how it goes. Good earnings estimates. Obviously they beat earnings pretty well here. But 30% grower this year and next is what institutions like to see. 5.9, again, just looking at this bottoming stuff. This is sort of a cloud contact center company. The stock got, it unraveled. It actually hit a low here back in March, held the lows, and now it's reacting pretty well to earnings so far this morning. We'll see how these, for all I know, this thing closes down here, or maybe it closes up here and really gets a head of steam going. But again, you just kind of have this, obviously for the first time in the last 8 months, we're starting to see these multi-month bottoming patterns, and we're starting to see some things let loose on the upside, see if it can continue. A few more names, sorry for running long, but it's my video. So some natural gas stocks. So EQT, I wouldn't say these are the best patterns, but EQT is one, and you can just see it had this huge, it had a big run, and then it had the huge break with all commodity stocks, but held the 200-day line. And to me, what I like to look at, it's not so much that it's an excellent buy point, it's just going to go straight up from here. It could, but it's just that it's recouped so much of its decline pretty quickly. That's usually a pretty good sign. Doesn't mean it can't pull back, but my guess is it's going to be sort of building a base here. If it doesn't keep going, it'll pull back, but reasonably so. Same sort of action in Antero Resources, not quite as strong, but you can see really recouped a decent amount. And Chesapeake Energy. Chesapeake, this is CHK. Antero is AR. This one still has earnings next week. The other two reported this week. But again, you can kind of see, whatever, 105 down to 72, back up to, call it 95 or whatever, 94. So it's recouped a lot of that. The longer these things can kind of hold up here, the better the chance that maybe the correction is over. Not that they're going to go do what they did the last 6 months, but they could head higher. And then a couple more names. LPL Financial, I mentioned this. They do have earnings next week, but again, now you're seeing this stretch above some resistance here. We'll see if it sticks after earnings. This is LPLA. A lot of leverage to higher rates, short-term rates and stuff. You can see the earnings estimates are excellent here going forward. And then last but not least, I just want to mention Tesla. Tesla really, it's very obvious at this point, but it still has the numbers. I'd prefer a newer name. But obviously, it went through the ringer, but it really didn't. You can just see on the chart, it's not like it doesn't look like, Twilio or something, one of these stuff. I mean, here's Twilio, boom, like that's dead and buried. Tesla never really did that. There's some of these, former growth leaders that didn't. It even tried to kind of come back here this year. That failed, but it's been bottoming out here for a few months now. It's stretching its legs. Again, like a lot of things, I'm not a huge fan of, when you buy these things into resistance, that's not my cup of tea. But maybe there's a bottom in place here, just something I kind of keep a distant eye on. And if the thing can, maybe it stretches its legs and then sets up something more proper down the road, we'll see how it goes. But it does have the numbers. And relatively speaking, it's quote-unquote only 30% off its high, which, given the glamour stocks this year, isn't the worst. So just something I'm keeping an eye on. Back to the market, I just want to look at the weekly chart real quick. This is the NASDAQ. The intermediate term trend is up. The follow-through this week is good. But you can see we're still below this 40-week line. Now, maybe in the near term, that's a good thing. Maybe that daylight, it's going to eat into that daylight, keep the momentum going. And I would just say that the higher we go, the better in terms of this thrust. If we can just kind of motor higher, that would really break the downside momentum. But at this point, just realize what we've seen here really in the past month or two for growth stocks, maybe month or so for the overall market, it's definitely positive. The evidence is definitely improved. And I think you should definitely take some action if you've been highly defensive. But it is a step-by-step process after a 35% decline in the market, and in the NASDAQ anyway, and a 60, 70, 80% decline on all these former leaders and IPOs and all this stuff. It's going to be a little bit of a process, my guess, to get things back on track. No matter what the Fed says or the economy does, it usually just takes a little bit of time for people to reposition their portfolios. So I'm definitely more encouraged, but again, step by step, and we'll see how it goes from here. Okay, that's all the time I have for today. Thanks for listening, and as always, come back again next week for another Cabot Weekly Review.